All right, folks, welcome to the first call for Forex Basics Education. We're going to do 4 weeks of this. So today we're going to just talk about basic terms, and then I'm going to show you an actual chart where we're going to chart out some of this stuff here. So my goal overall is to teach you how to basically chart out your chart, look for opportunities on that chart where it can be a sell, it can be a buy, or just knowing exactly where the market's going to be. So a little bit of my background for those who are brand new, you may have just caught me. Someone shared a link with you or so. I've been trading now for about 7 years, but my background, retired Air Force pilot. I flew C-130s for about 9 years while I was in. I was a prior enlisted guy. Did a lot of deployments to Afghanistan. Enjoyed my time as a pilot. You know, my educational background, I have my master's in human resource management with a minor in business, and then working on my doctorate of business as well too. So a lot of education, and I've been in the business field for some time, for over what, 12, 13 years now, and as well as real estate and being an investor. So this is one of the things that I enjoy doing. I haven't actually educated in the foreign exchange market in a long time, but I have a lot of content on YouTube. And I'm just about to just reload this content now. So you guys are getting a brand new course on Forex. And I'll do it over the next 4 weeks where I'll talk about, what we're going to talk about. Then I'm going to show you on the chart. So as we go along, feel free. If you can, of course, don't unmute your line. Make sure that's good too. Don't unmute your line, but you can actually ask a question in the chat. Okay. And then I'll answer that question at the end of our call once we're done here. So let's jump into this information here. So just some basic Forex term. What is the foreign exchange market? If you're new on here, you're like, what is Forex? Okay. Forex means foreign exchange. And basically, it's just a global market where currencies are traded at. Okay. Most of the time, your countries, your banks, your central banks, they're inside this market. There are $6.5 trillion. Okay. Let me say it again. $6.5 trillion that is traded in this market, folks. Okay. And so the things that are traded are currency pairs. So you'll see things like GBP, the Great British Pound, or you'll see USD, the US dollar. Okay. Or you'll see, JPY, the Japanese yen. So these are all different currencies of countries, and you may find the pair that you like. Some of these pairs, they move faster than others, or you may have indices. I like trading indices now. I'm going to tell you, brand new folks. Okay, if you're going to have a thing, the first thing you don't want to trade being brand new are indices. They move very fast. They're very volatile. They can make a lot of money and they can lose a lot of money. Okay, just as fast you can make money, you can always lose money. So just understand that is absolutely real inside this market. So we do quotes on basically the currency pair. So there's a currency that is paired with another currency. So like the example is given here is EUR USD. That means the euro dollar against the US dollar. So when we're looking at this market, basically what you're doing as a Forex trader is you're trying to determine the direction of where that currency pair is going to go based on each currency. And so when we look at EUR USD, EUR, for example, the euro, or if we're looking, and let's say the economy is very strong and it's pushing up and some things got said that made the euro strong, well, then it's likely, and then the US dollar, okay, gets weak. So what's going to happen? Well, that means the euro is going to overpower the USD. So in theory, we're expecting the euro USD to rise. Okay, same thing. If the euro is weaker, and the US dollar, the economy gets stronger, then what are we expecting? We're expecting for the Euro USD to ultimately have an overall downtrend or to head down. Okay, so you're going to learn these terms here. The base currency, okay, so when we look at EUR USD, the base currency is the first currency listed in a Forex pair. Okay, some of you have been doing Forex probably this whole time. You're just now learning this now. Okay, it shows how much of the quote currency is needed to purchase 1 unit of the base currency. Okay, so basically EUR USD, okay, the quote of the currency is what it takes to purchase the USD. So if you've seen, I don't know what the currency pair is at right now, but let's say the euro is at 1.30. Okay, well, that means it takes 1.30 euros to buy a USD, the base currency. Okay, it shows how much of the, I'm sorry, it shows how much the quote currency. So it shows we need $1.30 to buy one euro. Okay, so this first number, so let me say it again, the base currency, the first currency listed in the Forex pair, it shows how much of the quote currency is needed to purchase 1 unit of the base currency. All right, so this is the base currency, and this, which the quote will show how much of this is needed to buy this. And that's what's basically we're doing inside the market. We're exchanging currency. So the quote currency is the second currency in a Forex pair, so that'll be USD here. It represents the value needed to exchange for 1 unit of the base currency. Okay, the price at which the market or bid price, and then we're just going to go through some quick nomenclature. Okay, you'll hear things like the bid price, the ask price, and the difference between that is what we call the spread as well too. So bid price at which the market or broker will buy a specific currency pair from you. Okay. Thus, at this price, the trader can sell the base currency. So you'll have the bid price and then you'll have the ask or the offer price. This is the price at which the market or the broker will sell a specific currency pair to you. Thus, at this price, the trader can buy the base currency. All right. So just different exchange rates. And then you have the spread, the difference between the bid price and the ask price. Okay. What we just talked about here. And then you're going to hear this term a lot, pips. Okay. Percentage in profits or percentage in points is really the deal. Okay. So if you're to say pips, I'm going to show you what pips are and how to calculate them. Probably, I don't know if I'm doing on this one. There'll be a lot of information, but we'll talk about how to calculate pips in our next class here. Okay. But pips, a unit of measure to express the change in value between two currencies. Remember, EUR USD. Okay. Typically a pip is 1/10, 10,000th, thousand of the value of the currency pair. All right, so we're going to talk about what lot sizes are as well too. A standardized quantity of the currency being traded. So when you decide to trade, you're going to determine, well, how much do I want to risk? How much do I want to make? Okay, and so you'll pick a lot size. You have a standard lot size, which is 1, which stands for $10 per pip movement. Okay, or you can choose a 10, which is $100 per pip movement. And so in Forex, one standard lot is typically 100,000 units of the base currency. So that's when we say 1, it equals basically $10 based on how much is calculating in that quote pair. All right. Leverage the use of borrowed money. This is what makes Forex very powerful. Okay. Because you're leveraging or you have margin that you can use. So even though you may have, let's say, $1,000 account, well, if the broker gives you a 1 to 50, okay, that means you have 50 times 1,000. So it's like you're trading $50,000, okay, which is a big difference. It allows you to make a lot of money with a small amount of money. So you can take $1,000 and you can make $1,000. Now, be careful because we're going to talk about risk management. Just because you can make it, you can also lose it because of what you risk when you do it. All right. Margin amount of money required in your account to open a position. So when you put $1,000 in, you have a margin of $1,000. And of course, as you trade it, whether it goes up and down, it increases the margin or it lowers the margin. But it's formed in the collateral for the leverage that you're going to be using. A margin call, right? We don't want those, but a margin call is a broker's demand for additional funds when your account equity falls below the required margin level. Now, the good thing about Forex is you can't go unless you now. It depends on your broker. If you're using a broker like Charles Schwab, or you're using TD Ameritrade, or one of the U.S. regulated brokers here, then yeah, a margin call can happen depending on what you got approved for. So be careful. What I would do, I wouldn't want necessarily margin when I'm dealing with a broker like that, because they will demand money. You need to give it to them. But when you're using a standard like MT4, MetaTrader 4, MetaTrader 5, what you put in your account is what you have in your account. And once it's gone, it's gone. You don't have to give up any additional money here, okay? So I just want to make sure that's clear. So you may have heard this before. Basics, going long. So a long, it just means you're buying a currency pair with the expectations that the base currency will increase in value. Remember, the base currency is the first currency, okay? The going short, selling a currency pair if you believe the base currency will decrease in value, all right? Stop loss order. Get used to these type of orders. You want stop losses in there to protect the money that you already have. It's an order placed with a broker to buy or sell once the stock reaches a certain price. It is designed to limit an investor's loss on a position. Okay, this is what we need to get intimate with. You need to learn stop loss orders for real. Okay, take profit orders. Okay, this is a hooray. Okay, a take profit in order to close a position when the currency pair reaches a certain price level, securing profit. So if you're brand new to this market, you set a take profit where you expect price is going to go, okay, and you're going to profit a certain amount of money, versus if it goes the opposite way, you're going to set a stop loss so that you don't lose a majority of your money. So either you're going to win the trade or you're going to lose the trade and protect your account, all right? So rollover, the process of extending the settlement date of an open position. This just means your trade is going over to the next day, okay? And so what happens when you roll over, you're going to pay a swap fee or a swap interest paid to the broker, okay, for holding it overnight. And so you'll see rollover costs for those who are position or swing traders. There are traders that will hold positions for a whole year, okay? And so to do that, you pay the broker to do that, all right? Fundamental analysis, it's evaluating currencies by analyzing economic indicators, government policies, societal factors, and other information to predict currency movements. We're going to talk about this a little bit more. Like I said, in later sessions, we're going to talk about technical analysis. We're going to go deep in that. We're going to go over your checklist, how to enter the market the proper way, okay? And then look right now, y'all, so y'all know I'm actually trading here. Let me close my US 30. I've been crushing US 30. I got that drop there. Okay, boom. It was a phenomenal day. All right. So back techno now. So we're going to go over that. And then economic calendar, a calendar used by traders for tracking the occurrence of market moving events such as economic indicators and monetary policy decisions. Now, hear this closely. This is an important point. Don't just hop in the market to trade without checking the economic calendar. So we use what is it? My Forex market. Who do I have on this call? I know you guys know the website. I'm going to have the link posted for you guys for the Forex calendar. So basically telling you when there are red folders, when you have red folders, that means someone's probably going to speak or there's an event happen, or we call just different type of red folder events that will make the market go crazy. And if you're in a position, you risk the tendency of possibly blowing your account, losing all your money, or it can go in your favor. But that's almost like gambling because you don't know what's going to be said or what's going to be done. All right. So getting into some of the basics here. That's right. Thank you. Forex Factory, forexfactory.com. Getting in some of the basics here, we're going to talk about support, resistance, supply and demand. Now I'm going to show you all of this on a chart. I'm just giving you guys this. I'll give you this PowerPoint as well too, so that you have it. You can download it and kind of regurgitate it later on. So support and resistance. Support is basically like a floor, okay? It's where price will bounce off of, or the asset will bounce off of, or based off the definition, it's a specific price level or narrow range that the price of an asset has difficulty moving beyond, okay? So support levels lie below the current price and provide a floor that the price has difficulty falling below. So at a floor, if something keeps bouncing off of the floor, we're going to look for opportunities to buy when something is bouncing off of support, okay? While resistant levels lie above the current price and provide a ceiling above you that the price has difficulty breaking through, okay? And so that means it keeps on hitting the top of a ceiling to eventually either is going to break through the ceiling or it's going to reject off of it, giving us a sell opportunity, okay? And so you're going to learn some checklists based off of this, based off your support and resistance zones. See, this all sounds really easy, doesn't it? Okay, it sounds easy until money is actually involved. Supply and demand zones, okay? On the other hand, here are supply and demand zones. Similar to support and resistance, they're just a broader area that represents a range of prices where the assets has made significant moves upwards or downwards in the past. Okay, these zones suggest areas where institutional traders have set large orders and where the balance between buyers and sellers change. And so you're going to see, I'm going to show you supply zones, okay, and I'm going to show you demand zones. All right, so your demand zones, once again, just like support and resistance, the only difference is these are where large orders sit. So you're going to get large price moves up and large price moves down. And so this is where you can look for what we call, long-term buying position or long-term long-term selling positions. All right. Now, the key difference is that support and resistance levels are typically viewed as lines on the chart, while supply and demand zones cover wide areas and represent larger shifts in market dynamics. Okay. And so I'll show you that on the chart here. And then just here's what I need you to know. The market only moves in 3 different ways. That's it. Okay. And if you can determine which way the market is going to move, you can make money inside the market. All right. So the first way that the market moves, we call it a bullish trend. It's an uptrend. This is characterized by higher highs and higher lows. Listen, I'm going to blow your mind today because I'm going to teach you how to identify higher highs and higher lows. Because if you can't identify higher highs and higher lows, then you're not in a what? You're not in an uptrend. Okay. So the market sentiment is positive and buyers are in control, pushing the price up. Number 3, traders look for buying opportunities in uptrends where there are higher highs and higher lows, okay? And anticipating that the currency pair will continue to increase in value. Now, when buying in a uptrend, You want to buy at the higher low. Okay. You want to buy at the lowest point in the market of that uptrend so that you can catch the higher high, and that will be your profit. All right. And now when we're talking about the downtrend, that is a bearish trend. That means the price is moving downwards. We're going to talk about how to identify that. You identify it with lower highs and lower lows. Okay. Now with this one, when you're doing a downtrend, I'm going to show you this. You're looking for sell opportunities, and your sell opportunity is going to happen at the lower high. Okay. And so don't worry, I know you can't visualize it yet. I'm going to show you. Number two, the market sentiment is negative and sellers are dominating, driving the prices down. Traders might look for selling opportunities, expecting the currency pair will continue to decrease in value. All right. And this is where we're going to put together our price ranges, our supply zones, our support and resistance, with all of this together to make a decision on whether we're going to buy a currency pair or whether we're going to sell a currency pair. And then lastly, when the market is in what I call confusion, it's ranging, it's a sideways trend, meaning it's not trending up, it's not trending down, it's moving sideways. And so if you can mark your chart to identify when the market is ranging, when the market is in an uptrend, when the market is in a downtrend, okay, it kind of makes things kind of simple, because you're like, okay, this thing has been in an uptrend for a very long time. So what is the expectation? At some point, it's going to start ranging and change position to correct the market, because it can't just continue in an uptrend. All right. So in this scenario, the market doesn't have a clear direction and moves with a horizontal channel. The price oscillates between well-defined support and resistance level. Traders tend to buy at support levels and sell at resistance level, capitalizing on the price movement within the range. So ranges can be very, very large. If you are like a swing trader or a position trader, you like to hold for a couple of days or hold for a week, then you may, and you're buying in that range, and let's say it's a large range. So I'll tell you, like US 30 has kind of been ranging, for example, right? And so I buy and sell based on those ranges with US 30. So US 30 was at the very top. They did some manipulation today. They went up, spiked some calls out, and then I knew it was coming down, and we caught that sell all the way down. Okay. So that one right there, it was a very, very big sell. So if you learn how to become a good trader, you don't need to be in the market every day. Okay. You just need 1 or 2, 3 good trades, and maybe 1 good trade a week. So this is the trade that I've been waiting for. Some of you are on here. I probably, I talked to you a little bit about trading. You knew I was waiting for this. Okay. And so what happened? Man, everyone knew this was going to, I don't know. I feel everyone knew that the Dow was going to drop. It wasn't going to continue up. We know that the economy's not even that great right now. So we know this is not going to shift up anymore. It's been touching here several times. A lot of rejection off of this zone here. So price is not ready to move up. So I was very confident. And so when you see price go up, you can set a sell stop. What that means is price will go, when price comes back down, it'll blow through your stop, and then boom. Okay. And it keeps growing, you earn that profit. Or you can enter the position at the top of the market if you can catch it here. If you're a way to catch this, boom. But the market rallied up this morning all the way up. Okay, caught that position. We caught it all the way down. And the great part about this is this is market manipulation, by the way. This was a stop. This was a stop hunt. Okay, they know it's dropping down. So price is eventually going to roll down this way. This is our daily chart here. Okay, now let's talk about. We were talking about support. Okay. Here is support. This is support right here. You see this line that's going across? Now these are candles, and we're going to go over what candles are. So these are candles. Right now, I'm on the daily chart on this one. I think this is the daily. No, this is the 4-hour chart. So I'm on the 4-hour chart on this one. Okay. So what that means, the 4-hour chart means that each candle takes 4 hours, okay, before it closes. So once it opens up, so this is the open of the candle. It opened up, it drove all the way up for 4 hours. It did this. Okay. 4 hours, it was buying. Okay. And then this is a sell candle. Okay. And so for 4 hours, it was selling, and it came all the way back down. And then this price right here, this is the old price. We call it a wick. Okay. And we call it OHLC, your high, your open, high, low and close, or your open, low, high and close. Okay. So here's an open. Here's the highest price has been to. Okay. Then you have your wick. It closed here, right? You see this for this buy candle closed here. That's where you see the actual price there, open here. So same thing. Now with the sell candle, we opened here. The sell candle opened here, okay? Went down, all the way down. This is the lowest point, highest point. This is where it closed at in a sell candle, all right? And so we're going to talk about these patterns too. When you see patterns like this, you're going to hear people talk about an engulfing pattern, stuff like that. So when you're dealing with uptrend and you get confirmations, it'll let you know that price will continue up. So we'll talk more about that. But what I want you to know from here, this is a floor. This is support. You see why? Because you see candles broke through it. And then what happened is they tested. It bounced off the floor, one retest, two retests. This is now a floor. So when price comes down, it tests this area. So it's not just a line, by the way. It's actually an entire area. Okay. So this is the actual support area where price rejects off of. So every time price came up, price came back down. What did it do? It rejected off of our support, off of our floor. So that was another what? Buy opportunity. Okay. Every time it came into that area. And of course, it trended up as well while it was doing that. Okay. So same thing. This is and these zones that I have here, this is a demand zone. This is a supply zone. We're looking for a sell, okay? So once again, resistance. Resistance is a ceiling, okay? So we see the line here. Price rejected, boom, one retest. Go back. One retest, two retests. Right? That's our resistance zone. So yes, support and resistance can be the same zone. Okay. A resistance area can become a support area. So what do you wait for? You wait for a breakthrough. So what happened is price came through, tested, retest, boom, didn't make it, came down, test, didn't make it, came down, price stayed in this area ranging for a bit, trying to figure it out. So what happens when it's ranging is you have buyers and seller orders accumulating. Okay, so what you got to understand, when price is ranging, you have buyers and seller orders that are accumulating in the area, and may the best person win. So if there's more buy orders that accumulate that overtake the sell orders, then price will push up. Okay, why? Price is going to push up until people are ready to sell. Okay, because some people don't want to sell low. And so buyers, sellers, accumulation. Okay, more buyer orders, seller orders. Up, buyers won. Buyers accumulate. Sellers are trying to get back. They can't. Boom, retest, retest. That's all these are telling our story. So it breaks our ceiling. It comes back, retested. Boom. Okay. Retest. Didn't make it. Buyers won. This was a what? A buy opportunity, right? Price broke through. Never enter the market when price initially breaks through. Okay. We always want to wait for a retest. Boom, retest the market. Didn't break past the floor. Okay. We go in for our buy. And that's how we secure a position. You go in for, and this would have been a lot of money made with US 30, of course. And then you let the trade go. You can see it came right back down. So me personally, what I've learned how to do with US 30, I'll just tell you right now. US 30 is a shaker. It's not gonna let you keep long-term positions unless you're good with and you understand the way that the money moves, okay? Because this may scare you. You enter the market here, right? Let's say you do a 5 lot, which is $50 per pip. Okay, this moves up. You're making somewhere around, this is a large move. Okay, you're making somewhere around $10,000, $20,000. Okay. Yeah, you're making around, that's about right. $10,000, $20,000 just with this move right here. Okay, using a 5 lot. All right. Now imagine you are up that much. You don't take profit. Now, of course, you want to bring a stop loss in profit so that if it does come down, you don't lose the money that you've already accumulated inside the market. Okay. Obviously, price came back down. What did that do? Scare you, get out, you lose your money. So learn how to take profit when you can, or put stop losses in profit, and we'll talk about that. So let's go further here. And if you guys got questions, I'm talking, feel free. And I'm going to show you this on a real chart as well too. So I'm going to try to spend 7 more minutes on this, and then we're going to go into the real market while it's live. All right. So this is what an uptrend looks like. This is a low. Remember, we talked about an uptrend is based on higher highs and higher lows. So this is your low. This is your high. Okay. And then we got a higher low. Why? Because it's higher than this previous low here. This is what makes it an uptrend. All right. So what I know is, if I wanted to get into a trade, for example, if we were buying, do we buy here, or do we buy at the lowest point, or do we buy here? Yeah, we never buy here. You don't buy here. Okay, we sell here. We don't buy here. And so the goal is, and I'm gonna tell you, you don't want to sell in an uptrend. If you do, just know that you need to put a stop loss and profit very fast, because you can lose your butt if that thing continually trends up. Okay, so you want to always, I like to trade with the trend if it's not ranging. All right, so we want to buy at all of our lows. So we buy here, we would buy here, we would buy here. All right, so this is an uptrend and we buy at our lows. All right, so a line would go this way. This is a downtrend. A downtrend is based on higher lows and lower lows and lower highs. So this is our first high here. Price drops to its previous low. Okay, do we want to sell here? No, we don't want to sell at our low because it might go up. It's going to take us out of profit. We want to sell at our higher low. Now, we're going to talk about different type of indicators and tools that you can use, like the Fibonacci. We're going to talk about retracement levels and perfect numbers, right? 38% retracement, 50% retracement, 61% retracement, 78% retracement. These numbers also correlate with where people sell at or buy at, all right? And we'll talk about that as well too. So our high, our low, we want to sell at lower highs, okay? So price came down, boom, hit a low, it corrected, let's say 38, 50%, 38, this looks like it's a 38% retracement. So we go for a sell here, boom, we catch it all the way down, we get out at our low, okay, boom, or we either get out at our low or we set a stop loss at our lower high, okay? So that if price continues past this point, I want to take this profit here, okay? But if price is going to continue, boom, once we establish that there's a lower high, okay, we can put our stop loss right here in profit, and then price continues, and now you're just catching all that money all the way down. It takes a lot of patience to do that, okay? I'll tell you, I built some patience. I still don't have that much patience when I see the money happening, okay? Because the last thing you want to see is $1,000 on your device, and then it rolls back and you see half of it disappear, and you're like, ooh, I hope it don't continue up. It's a chance that you're taking when that happens, okay? So a lot of people, what they like to do is just go ahead and get out the market, all right? Let it continue up, and then you just catch the next entry at that high. So it all depends. All right, looking further into an uptrend, like I said, higher highs, higher lows, downtrend, lower highs, lower lows, and then here are different phases of the market, all right? So we'll have our downtrend, okay, which is our lower highs, lower lows, rolling to ranging, buildup of your buyers and sellers, right? And we'll talk about a lot of this stuff when you realize that market is going to swing back up. We'll talk about different patterns like the reverse head and shoulders or head and shoulder pattern to let you know that it's switching from a downtrend or from an uptrend to a downtrend. So you see how this is trending up, okay, and then it trend down. We call this a head and shoulders right here. So you have the head, you have the shoulder, you have the other shoulder here, and then we'll draw a line past here, and then we call this the neckline. Okay, and then once it breaks the neckline, that's where you want to enter the market at. All right, when doing certain things. So you're gonna learn a lot of that too. We'll talk about it in most of our other classes. You can look up, go ahead and take note, Wyckoff logic for market phases. This is just talking about accumulation, markup, distribution, markdown. We're not gonna go over that. Don't want to confuse you. We're just gonna talk about the basics here. We'll talk about some candle patterns in some later sessions as well too. A lot of people love to use candle patterns as well. Okay, they're not as that accurate. Okay. But they can get you when you're honing in on an entry. They can help you understand where the market is going to go. Okay, so evening star, you can take a picture of this. I'm gonna give you I'm gonna give you this PowerPoint as well too. Morning star, okay, bullish engulfing. What does bullish engulfing mean? Well, bullish means an uptrend. So if we're in an uptrend, right, you want to know if that trend is going to continue up. If you have a red candle, which is a sell candle, and then you have a larger bullish candle, and I'm trying not to say the colors because my colors are different on my chart. So I think my sell candle is yellow and my buy candle is turquoise, and that's for psychological reasons, because when you see red tells you to stop and green tells you to go, and that's not what you want. You don't want none of those signals inside the market. So that's why I changed the colors of my chart, and you'll see that for psychological reasons. But when you have a bullish engulfing, this is to say that, let's say we're in a downtrend, right? And then you see this setup in a downtrend. You see your red candle, and all of a sudden this big old buy candle comes out, engulfs your sell candle. That is an indicator. That doesn't mean the market is reversing. It can be one indicator that the market has the potential to reverse its direction. okay? And then you have a bearish engulfing. You would look for a bearish engulfing at the top of an uptrend, right? Looking for the reversal of that market. So let's say we're in an uptrend, boom, boom, boom. We get this green candle, which is our buy candle. And then all of a sudden we get this large red candle that closes and it engulfs my candle. Well, it just let me know, especially depending on what chart I'm on, whether it's the 4 hour or daily. If I see this on a 4 hour or daily, oh, we're going to have a change of direction, likely. And I'm going to look for other indicators, okay, to determine whether we're going to have a change in trend. And my goal, if I determine that we're having a change in trend, now my psychology goes from, oh, we were initially in an uptrend where I was buying. Now I'm looking for sell opportunities because we're now in a downtrend, okay? And then you have bullish railway tracks, which once again, this is determined going upwards. So you're looking at the 2 wicks here. Okay. And then you have a bearish railway tracks, same thing. And you just got the wicks here. That's all it's showing you. When you see, and you got to see, means momentum. There was no wick here. That means price took off. Okay. Same. This is it's a pivotal point here. So that's an indicator of definitely a possible change in direction. Okay. All right, we are done here. So let's get into the real charts here. So hopefully, if you guys have already gotten some value, hopefully I didn't lose most of you so far. Definitely type a 1-1 in the chat. We're going to go ahead and post up our chart now. Here we go. Let's see. Actual charts here. Good, good, good. I see you guys getting some value. Great, great. Now, what I want you to do, no question is a dumb question, okay? I'm telling you because I know what it took for me to learn in the trading space, all right? So these markups here, let's just start with the trends. Let's start with trends, okay? Actually, let's start with some nomenclature over here. So right now, this is the Dow Jones. Okay, you ever watched the Dow Jones roll across the news and it says the Dow's up this much percent, the Dow is down this much percent. This is what we're trading today. Okay, the Dow. All right, you have US 30. They call it US 30. It's the top 30 companies in the United States. Okay, the top biggest corporations, and basically bundled up into one device or one instrument, financial instrument. Okay, and we determine. So if you get bad news on the top 30 or on one of these companies, it could, not one of them, but maybe let's say that something happens in the economy. It will, this will drop. Okay, if we got bad news about the U.S. economy, okay, this will drop instantly. That's why you have these drops here. These are events that have happened. And so if you understand how to look at economic calendars, what's happening in the news, you can definitely determine where you're going to be at, okay, or what your plan is. All right, so let's go with our downtrends first, okay? So when I'm marking up my charts, I want to determine, and I remember my breakthrough when I learned this, okay? This is a downtrend, not because I put a line here, okay? But yes, this is a downtrend. So price is moving downwards. Let me just show you the arrow here. Price moved down, okay? Now, what determines the downtrend? Can anybody remember? Remember what we talked about? It's a what? Lower high and lower lows. So first, let me go ahead and mark up this chart. So you guys, I mark up my charts this way. It just makes things easier. And maybe you may adopt this. So this is our initial high. Because when you understand where you are, then you can take advantage of the opportunity. Okay, that's our initial high. Now, if you're not clear, yes, it's subjective. Is this a low? Yeah, that's a low. That could be a low, right? Because we had price come up. Now, this was a stop hunt. Man, this is crazy. This is crazy. And I'm telling you, US 30 is this one is crazy. This is our initial low. Okay. Y'all see this wick right here? So let me tell you what happened. Someone already seen this. Okay. And when we go to a lesser chart, someone entered the market. See this pattern here? So we shifted down. Someone entered this market, right? So they know there were sell orders sitting. There were stop orders sitting here. So people entered the market here for their sell. Okay. And guess what they did? When they entered the market here, because that's what any good trader would do, they enter the market here. What do? They put their stop loss here, or they put their stop loss above here. So if they seen this right here, that wick came down, they entered that sell here. A lot of people entered sells here, okay? And guaranteed they placed their stop loss right there, okay? That's where the stop loss was placed. And guess what? Yep, it went all the way up, knocked that stop loss out, came right back down. Thank you very much. And went about his business, okay? So you got to understand this market is manipulative. It's going to happen. So you got to strategize yourself to get used to either taking profits, locking your stop loss in profit, or whatever, because these things are going to happen and they're frustrating. All right. So once again, this is our high, our low. So what do we have here? That is a lower high. And when I'm looking at price, I'm sure I know someone has this question. You don't use wicks as highs, okay? Your wick is the highest point price has been, but the current price closed out here, okay? So this is where we are here. So price came down to our low, then price moved up to our high, right? So you can see that. Then price moved down to what? The next low. So what is that? That is a lower low. Okay, everybody seeing this? And I went to a seminar and I learned this. And I remember because I went to a program and I was still having a problem to really identify my chart, and I could not identify my trends. And so what I'm teaching is something that I learned, and it changed the game for me. Okay. And then what we have here, that's our lower high. So we can see this is a downtrend, right? And then what happens? We got to drop. So here, down. We'll just take it down here. That's a large drop. We'll just take that down here. We had some big swings there. Lower high. That can be another one right here. Okay. Low point. And it's not going to be pretty sometimes, but it's you guys get my drift, right? Correction right there. Boom. And here. Right? And there's our low point. Now we have some crazy stuff happening here. We're going to look at some other charts here, but you see there's a gap right here between price. Okay. But price, it pushed up hard. Okay. So we had our shift. Now remember I talked about a head and shoulders. Man, I see so much on this chart. All right. So this is a downtrend. Represents lower highs and lower lows. Okay. And so where we enter the market here, we would enter the market if we wanted to, if in a downtrend you sell. So we would enter the market here. That one. That's not what my indicators, folks. Give me 1 minute. There we go. Think about this one. So we would sell here. And then stop loss will go right above, right? We would sell here. Really, you would sell here, right? Here. See how price came down, then came back up. Same thing. Price came down. You've been in profit here. Price comes back up. You probably have a stop loss somewhere up here. Price comes up. Price comes back up, takes you out, and then goes right back in direction. So don't be surprised if that happens. Okay. So this is what it will frustrate you to the point where you don't put stop loss, and then that's what's going to hurt you in the long term. Okay. This is going to happen. It's the most manipulated market ever, but you can make a significant amount of money in it if you know what you're doing. Okay. So once again, price came all the way down. When you see the wick, that means that wasn't the current price. Price pushed all the way back up. So it took out these stop losses in profit. Okay. Went all the way back up to entry. And then what did it do? It dropped all the way down. Okay. All right. And once again, we're in a nice sell. We get a good big move here. This is a lower low. We don't sell at lower lows. Okay. You would be in trouble if you did that. Because now you got to wait. This is what happens to us. If you don't identify where you are on the chart, you sell here. Guess what you're waiting for? Price is going all the way up. Hopefully you got a stop loss in, so you don't take all this, but it goes all the way up, and now you're negative. Okay. And you got to wait for this break point before you go into profit. Okay. So you want to make sure that you do enter the market the correct way. So yeah, you would sell there. So we sell in downtrends only. We would sell here. We would sell here. See that engulfing? We're still in sales, right? And we would potentially sell here. Those are all your sell points, okay? Now price just reversed on us, okay? We went into an uptrend. We take that all the way up. So our uptrend, once again, starts our low. Now, let me show you something really quick. A head and shoulders pattern. May not have it on there. Whatever, right there. So this is a reverse head and shoulders. So when we look at this, watch this. Boom. And it's when a reverse head and shoulders, when a downtrend is going into an uptrend. Okay. And then you would enter here. So remember I talked about that neckline? So if when you enter the market, you wouldn't enter down. You could enter down here, but you would have to really know that price is really reversing because price may continue down. So let's say that you don't hop in here, you're smart, and you say, I'm gonna wait to see, get some retests and make sure the price is really gonna break and be in an uptrend. So boom, you let price push up, it creates that next high, or really it levels out here. It's not high, it hasn't broken yet. Comes down correct, goes up. Once price break this zone, now price has broke the previous high. Okay, once price breaks here, price has broke the previous lower high, which now it's a higher high. Okay, so this would be a higher high here. All right, so I just want to show that. That's what the head and shoulders is. So let's say this is our low. Roll into our uptrend. This is our high point. It broke this previous high here. Sometimes these charts, they just look ugly. Let's call this our lower, our higher low. So now we're in higher lows. What's a higher low? It's higher than this low here. Okay. Now, boom, we got that. So one, boom, we could enter the market here now. Okay. And if we're in the market here for a buy, we would have pushed all the way up. Boom. And what is this? This is our higher low as well, too. Not pretty, but it's what the chart is. This is a higher high. And you guys are getting my drift. So I want to move on. You guys, just want you to identify what an uptrend is. So what do? We buy in uptrends. We buy at the higher lows. Okay, so here are where the opportunities are. Okay, we could have bought here, which is a support and resistance area as well too. See how that was, it went up, rejected off of this area here, came back down, and then it finally pushed through and then retest the area. Okay, this would be your buying point. Stop loss goes here, or stop loss goes below this previous low here. Okay, and then we let price push up. Okay, once again, we would buy here. Now when price moves in, because the market moved sideways, this is let me show you guys another thing. When the market is correcting, okay, we call it consolidation. So this is, market was moving sideways here. Market was moving sideways here too. So when market is moving sideways, what's happening when the market is consolidating or moving sideways? It's an accumulation of buyers and sellers trying to figure out what direction the market is going to go. Okay. So determining when the market is moving sideways will determine when you can go into an opportunity as well too, knowing what the market is doing. Right. So this is an uptrend. Boom, price breaks out, sideways, price moves up again, and so forth. Right. So that's an uptrend here. Now let's talk about now when we talk about zones. So coming to current, right? This is where the market is at now. So this was the trade I was in. We were in this trade this morning. And I caught all this all the way down to what, about $15,000 off a move here like this. Okay. And it depends on your lot size. At the same time, it took a gang of people out up here. Okay. It blew accounts up here. And they knew it. They know what orders. Unfortunately, a lot of these brokers, they know what orders are in here. But remember we talked about, you see this engulfing pattern. Now the market has been moving somewhat sideways. Okay. But it's still trending upwards. But the market has been moving sideways. It's rejecting off this area here. Okay. It's like the market really slowed down a lot. All right, let's go back to that one. All right, so now coming to the current market. So remember we talked about the market moves in several different ways. Let's look at what we have here. So the market, when it ranges, it's trying to determine. So looking at the phase of the market, this was our downtrend where the market was moving for a little bit. Then we have this entire uptrend. So we would have been buying the entire time here. Okay. Then the market started moving sideways right here. And when the market moves sideways, it's trying to determine, okay, which way do I want to go? Am I going to go down or am I going to go up? Okay. So this one, we got more up pressure. So we entered another uptrend. So as of right now, we're trending upwards. And this is where we have to be careful at. Okay. When we enter a range, I know a lot of you, some of you on here, you do trade US 30 as well too, right? So looking for that trend up. Now, I was waiting for this drop. So price is still, to me, ranging. Okay, so we're determining if price breaks this point, we're waiting for it to break this point here to determine if it's going to continue downwards. Point here, okay, and then we have here. So price may come, if price comes back past this part, it comes down to this area, it may come back up, retest, and then we start getting our shift downwards. Okay. So now that's the move I'm looking for. Now I'm out of the market, but what I'm looking for next week is because I don't want to hop in the middle. I want to hop in at the next if it's going to trend downwards in this range, I want to catch the next lower high once it corrects up. So we go look at let's go look at our 15-minute mark. Now I'll tell you folks, I got out because I just couldn't take this right here. Okay, man, I couldn't take this. I made my money, and I'll tell you, I tried to enter the market again when you guys see me closing out a trade. And this is what you got to be careful of, okay? Because you will give your profits back. I'm gonna give you guys a real story right now, okay? So this morning I made my money, okay? And this is what I want to give you the psychology. Even being, I would say I won't say that I'm an expert, okay? I won't say that at all. I think I'm a pretty good trader, okay? But I still have momentary lapses of judgment in the market, okay? And those momentary lapses of judgment can cost you money, all right? And so my momentary lapse of judgment was, I just caught this move. I made money. I'm good for the day. But what did I do? Oh, I know that's going to drop because that's what I charted. And I entered the market again. So guys, when you see me and I was closing out a trade, thank God I was closing out in profit. I had entered a trade at the end. Never enter a trade after an impulse, after a huge move. Don't enter a trade. We have to get a correction. Okay. So we don't know if this is going to continue up to make an uptrend. Okay. Or if this is going to continue past to go all the way down. So we need to let the market do what it's going to do now. Now, a lot of you looking at this as trending, right? This is right. This is a higher high. I'm sorry, higher low. This is a higher low, right? I just taught you that. However, we are ranging here. The truth is, this whole thing right here, sideways, okay? Or the market is rejecting off this area. I'm sorry. The market is rejecting off this area every single time, Okay. Now it went past and retested off it, then it just dropped. This was more of a hunt, I think. But we're gonna, for me personally, I'm gonna look now. If do would I want to enter this market for a potential buy? Possibly. It depends. Where I see a lot of wicks, but I don't know. This price can just push down. But here's what I'll tell you. Me personally, I want to make for more indicators, wait for prices to actually start moving up. Okay. This will be the area I'll be looking for. Okay, that's our previous higher low right here. So what we wait for is either price will reject off of here and continue upwards, or price is going to break all the way down. And if it comes here, if we're looking for price to reverse, I want price to come past this point here, okay? Probably retest or go past, and then it's going to reject off that point, creating a what? A lower high, okay? Going into your downtrend, all right? If it's going to trend downwards. That's what we're waiting for. Or price is going to reject off this area here and is going to continue to maintain somewhat of what an uptrend is, okay? And that's what it looks like it's doing. It's respecting this area. You're seeing all the wicks come down and it's respecting that area here. Okay. But let's say you enter a small position. Let's say that you enter a very small position. And then you put your stop loss below here just in case it continued all the way down. Okay. Now that would you would enter a small position to do that, just in case price went. But me personally, why I wouldn't enter the market right now, first is Friday. And then lastly, because yeah, we need all those confirmations. But let me show you one thing. We won't talk about Fibonacci's today, but I want to show you something. This to me looks like it's about a 61% retracement. There are numbers that you can run instead of just looking at the chart. There's numbers you can run that price typically rejects off of the 61 to 78% are good buy or sell zones. Right, there we are. We're in between. This would be a buy zone, okay, based off what I'm looking at. So our Fibonacci retracement, so it sits in between our 61% to 78%. So I'm gonna pay attention to that area. And if it keeps on, this is a buy area here. Okay. So what could you do here? We could buy here and then we could put a stop loss here. That's what you can do. Okay. This does look like a pretty good opportunity there. So just know, and we'll talk about risk management and all that good stuff too. I think you guys might have got where are we at? We got enough today. We talked about support resistance, some of the basics. Are there any questions so far? We covered a lot today. And then next week we'll go over. I'll go because I could talk all day long about trading. I could talk about what I see in the market. For example, we'll talk about divergence. Okay, hidden divergence and regular divergence. So how do I know price is going to reverse at some point? Well, because I got to see if this is telling me the current price is telling me the truth. Okay, so this is trending up, right? However, with it trending up, our RSI should be doing the same thing. But RSI is now trending downwards. Okay. It let me know there's a conflict. We have a conflict here. Okay. So price is pushing. This is why we're rejecting off this area. This is why I'm waiting for this fall. I am waiting for, personally, I'm waiting for the trend to come down to this zone here. So this is one of our major zones, and this is one of our major zones. So I'm waiting for price to give us a confirmation, and then it starts coming down this way. And we'll know next week if we get that another sell candle, then we'll get that downtrend to this area and down all the way down back down to the 37 range for US 30. If not, it'll break the zone, retest it, and then we'll get a continuation of the uptrend. Okay. Um, looks like there's no questions, you guys. Okay, Nancy said after accumulation, so basically after consolidation, how do you determine where to enter the market? That's a good question. Let's talk about that. Let me just erase this all off. Let me clear my chart. All right, so you just ask in accumulation. So let's talk about what's current. I'm gonna look at what's current. I always like to go from top down. Okay. So for example, here we go. Price is sideways here, right? Right, that's sideways. So we need to determine, is price going to continue upwards or is it going to go downwards? Okay. So what I would do if I'm looking at this box here, okay, well, I want price to break out of the standard. This is where price has been. Prices range here for, see, 4 hours. So 1, 2, 3, 4, 5, 6, 7, 8. That's 1 day. So price has been in this for a day and a half, ranging for a day and a half in that zone. Okay. So what I would wait for before I enter the market. Now you can trade in this range. So you can trade from the top of the range to the bottom of the range. If you trade in this range here, obviously this is a daily. This is where most people are trading at. This is what I just showed you. So if you're trading this range as well too, make sure, once again, this is what people did. These were a gang of people were selling here. Look at it's obvious. Look at that engulfing pattern there. Okay. But people were trading here. They were selling here. I was selling here. Okay. There's a lot of sells here. And what they did was knock all those sells out this morning. Boom. Knocked them out. And then it continued where it was going to go. Okay. Now what's going to happen? We got to determine, is price going to go up? As of right now, price is going to probably shift back up. Okay. And so what are we going to do? Stop loss will go here, right? If I were buying in, stop loss would definitely go there, okay, and enter a position. But I wouldn't do it just yet. A lot of people are scalping, and you could scalp this. I'm gonna stay out of the market today because I've did what I was supposed to do. You know, it's so funny. I'm telling you, the psychology is crazy. As I looked at this, I was like, man, that would be a good buy opportunity. I'm like, I could scalp that up right there, but it's dangerous. I'm telling you, stay out the market today. So yeah, to determine whether I would get in or not. So you have this box here. Okay, you want price to come out, break out, close outside of the box. Okay, it's going to retest it, and then you should get a continuation down. I wouldn't enter until I have my confirmation of that continuation, right? That next point there. Okay. So if I was waiting, that's what I'll wait for. I'll wait for that. Boom. Price comes back, retest the area, comes back up, and then down. Okay. Now, a lot of you, if you trade before, this can be considered double tops. We have so much that is inside here that says that I believe price is going to move down. And then so you know that things are symmetrical. We did get our bearish engulfing pattern here. Okay, we just showed you that. Price did close below it. Price is continually moving down. So if price closes somewhere out here, yeah, we're going to get our trend down. You can get a correction that's going to go back up, probably test the area. I would probably enter there and then put a stop loss at the top. That's how I enter if I was looking for the downtrend. Same thing applies if you're looking for the trend up. Price breaks out. Okay, closes, comes back, retests the zone. Okay, doesn't get back in the box and continues up, shifts up. Okay, so that's how you really enter the market. Now I'm looking at a 4-hour chart right now. Let's go down to our 1 hour. All right, there goes our 1 hour. So we gotta, here's what we got. We got a candle that's pushing back up. So once again, where I said stop loss right here, this is a potential in the range area buy setup, right? But I think it's a correction. So we were running a Fibonacci on this. Okay, we can say price may go somewhere around this area here, right? Right between our 61 to 78, or right before, and then price will continue back down. Okay, or price can be somewhere around this range. It just all depends. But I would wait for it to, if I was looking for a big move downwards, I would wait for it to retest the area and then enter. Okay. But we're going to talk about that checklist. I know I'm getting a little bit ahead of our training. We're going to basically take this step by step. So the next one I'll talk about a checklist. I'll talk about more about techno analysis. I'll talk about fundamentals, how to go look at Forex Factory. So Forex Factory is here, forexfactory.com. I'll show you those folders real quick and we'll go more in detail about each folder. Right. So every day before you trade, you want to check this. So for example, if you're trading USD CAD, right, you will want to know what these folders would do and what would be the impact. You have things like FOMC. FOMC, you want to stay out of the market during FOMC. Anytime you have a speaker, so GBP. So come Monday, 1 p.m. GBP is going to move in some direction based on what this person says. Okay, this is the Bank of England. The governor of Bank of England, Bailey speaks. He's going to speak. So when he speaks, that currency is going to move in a direction. What do we have next week? GBP claiming. Red folds are what makes the market move. CPI, employment change. A lot of GBP. So GBP is going to be rocking next week, okay? So if you're in a GBP trade, understand it's going to move through the market, okay? There you go. All right, great question. Let's see. All right, let's see what we got here. Yeah, you're right. Andre was saying there's potential head and shoulders forming on the daily. Absolutely. So yeah, we get that shift down, so it could be a bigger move here. All right, I think we've covered enough here. I'm gonna go ahead and stop the recording. If you have further questions, feel free to ask them. But if not,